Hey everybody, I am Leslie Bishop. I'm here to talk about real talk, and today's topic is going to be about money. So if somebody can just tell me that I'm in the right page and that you can hear me. I've been having like the craziest issues with Facebook Live, so if you can tell me that, I will get started. Anybody, do we have anybody in here? If we don't, in like a minute, I'm just going to start. Okay. Hey, Brittany, can you hear me? Just tell me if you can hear me. Okay, cool. Okay, so about a month ago, Elizabeth had us select what topics we wanted to talk about, and I really kind of racked my brain because the whole idea of real talk is that we're talking about things that no one really trains on, and I didn't really feel like I had a topic that nobody really trained on. I didn't feel that I was like an expert in any of the stuff that like were listed as potential topics. And then I started thinking about it, and money is something that nobody trains on. And it's something I'm particularly passionate about because what I want for all of you and for your teams and for my team is I want all of you to have profitable businesses. And so this is just something we don't really talk about. We talk about different ways to grow your business, but I'm talking about what actually goes in your pocket at the end. So let me just start with a disclaimer. I majored in English. I'm not a CPA. I'm not a tax person. I'm not even like necessarily like a big expert. It's just something I feel very strongly about. I also think that this is a topic that potentially could have a lot of varying opinions. I think philosophically, my opinion is correct. Philosophically, okay? However, I think that in implementation, there can be a lot of varying views, and I would love if anything I share is something that you would implement in a different way. I would totally love for you guys to give your comments and feedback. I do not believe that I'm totally right on this. I do think, again, my philosophy on it is correct, but how you might implement that in your own business it's your business. And so I just would love if there's other ideas or thoughts, I would, not challenge you, but just invite you to share those ideas as I'm talking. Let me just start with something called top line revenue and bottom line revenue. Okay, so top line revenue is your paycheck. That's the revenue that comes in. That's what you've earned from Rodan and Field. So your top line revenue is your $2,500 paycheck, okay? Your bottom line revenue is what comes into your bank account after all of your expenses. These are two totally different numbers in a lot of cases. If you are loose with your expenses, you might have let me just give an example. So you might be getting a $2,500 paycheck. We'll just use that as an example. Might be a kind of entry level 5 paycheck. And maybe you're spending $500 on incentives. That's $2,000. And then on top of that, you're spending $125. We'll do 100 because I can't do quick math in my head. $100 on your CRP and Pulse. You're now down to $1,900. And then maybe you went out and did an event and that cost $200. Now you're down to $1,700. And then in addition to that, you decided to give $200 off. You did 2 enrollments and you gave $200 off their kits. Now you're down to $1,500 of bottom line revenue. And then you guys get the idea. Okay, so what your paycheck is not necessarily what your bottom line revenue is. And I want to just give you guys an example because I've worked for a medical device company, one of the largest in the world, for 14 years. And for the first 13 years, I was in sales until last year I was able to go part-time. I create podcasts for them now. And so I don't work in sales anymore. But our stock price, when I started, it was like in the 30s. And then it literally over the years was down as far as like $5. And basically for one share of a med device company to be less than a matinee ticket is just, it was bad. So we got a new CEO. We had a series of CEOs, but we got a new CEO and he focused on 2 things. He focused on top line revenue. He's focused on top line revenue by investing in new companies, buying up new companies, putting a lot of money into research and development, into creating new products that would create new revenue streams. So he worked on the top line revenue, but then he very much worked on the bottom line revenue. So let me just give you some examples of how this looked. So when I started at my company, Every time we would go out to dinner for a work dinner, it would be a very fancy restaurant. We would buy the most expensive wine. We would eat whatever we want. We weren't worried about it. Our bosses kind of had unlimited expense accounts. And then when we would stay in hotels, same thing. They'd be very, very nice. I'm sure we had a limit. I don't know what it was. I mean, it wasn't like $1,000 hotels. I don't mean like that. But, and then with our customers, we had not like a pharmaceutical rep. We don't do entertaining like that, but I had a decent budget for entertaining my customers. Well, anyway, they came in and they cut across the board. So like suddenly the dinners had to be much more modest. We were going to normal restaurants. Suddenly our bosses are like super conscientious about the bottle of wine being selected. And then they cut our expenses down to $250 a month. Okay. And I was responsible for like $5 million of revenues and multiple hospitals. And so like that would be one lunch. Like if I wanted to do one lunch, my expense budget was gone for the month. And so anyway, so by implementing this two-tier thing, the top line revenue and then increasing revenues by investitures and expanding products, and then by cutting our bottom line revenues, our stock price has gone from $5 to like nearly $30 now. So if you think about it, there's two ways that you can earn more money with Rodan & Fields. You can grow your top line. And every other person that's talking is talking about ways to grow your top line. And I feel very passionately that I want you to grow your top line. I want every month your paycheck to be more and to be bigger. This is extremely important that you're growing. However, if your volume is the same and your paycheck is the same, but you actually are able to reduce your expenses, your income is more. And so just think about it. If you can increase your top line revenue and you can decrease your bottom line revenue, you're going to have actually more money for your family, for causes that are for causes that you're passionate about, for other things that you can do to pay for your kids' school and your retirement and all of these things. This is stuff that's like seriously really important to me. And I just don't think it's something we really talk a lot about. And I don't know that all of us are thinking about it. So now, that's my philosophy, which I think there's really no disputing that. The question is, how do you implement that? And this is where there's going to be varying opinions. And this is where I would love discussion among you, but I'm just going to give you guys some ideas. So the first thing I want to talk about is incentives. And I have to tell you guys, I am like schizophrenic about this topic. I don't like gift giving. A lot of times I wake up on Father's Day and realize I didn't send my dad a card and I didn't even buy Todd a card and I don't have a gift for him. For our anniversary, we do not do gifts because both of us don't really like shopping for gifts. For my birthday growing up, we would do like, I'd get like a shirt or something. I mean, it just wasn't something. So like, I'm not in the habit. I also have like no confidence in my own style. So I find it extremely stressful to buy gifts for other people because I'm not confident that they're going to like them, and I'm going to be investing in something that's like something that people are going to like. And so I personally find the whole the gift buying process at Rodan & Fields like stressful to hear. Okay, now there's people like Elizabeth Guess. It is her love language. Like she finds so much joy. Now on the other hand, hang on, I love to receive a good gift. I have gotten some of the most amazing gifts over the years from my upline. I have the most gorgeous, I'm not wearing it today because I had to put it in a safe when I went on vacation and I don't know how to open the safe. Lisa, my upline, gave me the most gorgeous David Yurman necklace last year when I hit RFX Circle for the first time. I alternated between that and this is the Tiffany one that Rodan & Fields gives us when we hit RFX. And I mean, I cherish and love that necklace like so. I wear it all the time. Okay, so I love it. So I like getting stuff. I like receiving stuff, but I find it very stressful to give things. And then on the other part, it kills me. It really kills me when I look on my timeline and I see new consultants giving away Tory Burch and other things that are very expensive when they're like at level 2 and they're congratulating somebody who had hit EC. Okay, so what I want to talk about is what we can do to maybe duplicate in a more effective way, and just to be thinking through like, what am I doing when I'm spending this money? Like, what am I achieving and what am I trying to achieve? Because I think if you just step back and answer these questions for yourself, you'll find that you might be a little bit more specific and targeted with your expenses. They may actually stay the same, but then you might actually increase your top line revenue because you're being more strategic with the way you're doing them, or you might reduce them and then you're reducing your bottom line revenue, but you're also increasing because maybe you're being more strategic. Okay, so I really want you just to be thinking about what is my goal with this incentive. For instance, let me start with you need EC legs, okay? So we're not talking about that you need volume. We're talking about you are at 6 EC legs, you're short, you've got 2 people who are at 300 and you got to get those people to 600, okay? Or you're running for the premier trip and you're short, you know, you're at 8 and you need 10. You guys understand what I'm saying? Okay. It does not make sense to make a team incentive when you need 2 people to get to EC. You need to actually make a private, in my opinion, again, this is where I'd love to hear other opinions, but I think it makes more sense to make a private incentive that other people don't see that's specific for these legs that are short. Okay, now, also, the legs that you have short, a lot of times, the reason they're not getting there is because they're not working the business or they don't really know how to work the business. So if you were to say to them, hey, I've got this beautiful Kate Spade necklace, if you can get to 600. Well, they look at that and they go, well, that's nice, but I don't know how to do that. I can't get to 600, so thanks. So you've like bought the necklace for this incentive, but then you don't have anybody that's going to run for it because you're not motivating them necessarily in the best way. So what I've found that's more effective is this. And I'd love to hear other thoughts on this, but to go to them and say, hey, Mary, so let's say the person's at 300 and you need them to 600. Okay, that means they're like 100 PSQV orders short. So go to them and say, hey, Mary, for the next 3 days, for your next 3 orders of $100 or more, I'm going to gift that person a free eye cream. So what I want you to do when you sell the eye cream or when you get the new PC, have them just throw that eye cream in their cart, and then I'll just send them a check or PayPal them the money. Okay. The other part about expenses is that your time is an expense. And so having to like place an order or ship something, there's some time involved in that. And so if you can make this very easy for yourself, it's way more cost effective, right? And so you've also gotten PSQV out of this and you also get commission, okay? So now this person who is they're a super weak leg, they don't really know how to get to 600, okay? You're now going to them and now they can go to people and say, hey, I know you were kind of interested in our products. Like I now have a free eye cream I can offer you, but only for my next 3 orders and only for the next 3 days. Do you want to place an order? I'll tell you what, a lot of times, something like that, an eye cream, a lip serum, those are good value items that you're going to get commission on. They go into your PSQV, they go into your org volume, and I'm telling you, they're more effective than giving somebody a $50 something. Now, you might have somebody who's actually an awesome person in terms of their overall, maybe they were like a super involved consultant and then they've just kind of gotten out of it, and those people know how to close business. So in that case, maybe it does make sense to say, hey, Susie, I'll give you this if you can get there. Okay, so I just want you to be thinking, like, is this somebody who really needs help to get there? Then the other part is give them some language and give them a text and an image and help them to get there. So like, hey, here's some wording that you could copy and paste to like 50 people about this incentive. Okay, so then you're giving them actually wording that they can use, and I'm telling you, you'll have a lot more success getting those people there. So instead of, if you're trying to get EC legs, instead of making an incentive where you're giving away some really nice $200 gift for your whole team, and then the person that was going to get it anyway gets it, and then your EC legs don't grow, you're taking money and you're like throwing it down the toilet. It just kills me. Okay. Now, if you're trying to grow org volume, that's something entirely different. So if you're trying to grow org volume, you need to be thinking about something that will be exciting for everybody. But then I want you to just do some simple math. For every $5,000 in org volume that you grow, you just take 5% of that, you're going to earn an increase of $250 in your paycheck. You have to pay tax on that. So let's just say tax is 30%. That's $170 to $5 net to you. So hopefully if you're doing an incentive, you get more than a $5,000 bump. But I just want you to be thinking about that because, okay, what am I trying to do? How much am I trying to grow? How much could this make me grow? How much should I invest in my business? And be thinking through that. So maybe it is worth getting a nice $200 gift because you're going to get a bump of 20, 30, 40, 50, 100,000 maybe, potentially. Probably not 100 on an incentive, okay? Another thing just to be thinking about, in your experience when you're doing incentives, are they working? Like, are just the people who are already working doing stuff? Like, are you just, like I used to do a monthly incentive in my page, And the last time I did it, people that achieved it didn't even like submit their stats. And I realized like people don't even care. So I realized like this is not having the effect that I wanted to have. So I stopped doing it. I'm not giving money away if it's not going to have a beneficial effect in my business. So I've taken that money and I'm reinvesting it in areas of my business where I am seeing a return. So I'm just thinking through, like, I just want to be really strategic in terms of like what investment I'm going to place and then what's the return. And if I'm not seeing that I'm getting the return I need, then I'm not going to repeat it. So I think it's wise just to be thinking about like, okay, are people responding to this? And am I getting the growth I need or the EC legs or whatever? I hope I'm making my point clear. Okay. Oh, good. You're having this conversation with somebody. Yeah, I think, okay, so here's a whole nother part of this is duplication. This is the thing. This is what really kills me. People people just do what they see, right? If they go and if they are brought on a three-way, they bring people to a three-way. If they're not brought on a three-way, it's really hard for them. If their upline did a BBL, they do a BBL, all that stuff. Okay. So when they see their upline giving tons and tons of incentives, they feel they have to do that to run their business. So if you have figured for your business that incentives are working, okay, and you need to keep doing them, I do think it's valuable to have a conversation with your new people and maybe even with your more experienced people to talk to them about profitability and what they're doing with their money and that they don't need to do that. That they don't need to be doing that when their paycheck is $300. Because here's the thing. You have people that are earning $300 a month and they're giving all their money away on incentives. Do you think a year later when they run their taxes that they're going to still want to be with Rodan and Fields? Like they're not, because they're not keeping any money. They're giving it to Susie and Sally and Jenny, and those people are quitting their team, and it's discouraging. What feels good is like money that actually impacts your family. And so if you feel that you're going to be doing incentives, and again, I think they're very valuable. I use them strategically. I just want you to train people to be very smart about it and to think about where they are in their business and what they can afford. So just a rule of thumb I use for my annual expenses, I want to spend about 10 to 20% of my total income on all my expenses. So this would include going to convention. This includes gifts. This includes, deals I'm doing, CRP, all of that. So that would probably mean when my check was a lot lower, that would mean I'd have to keep my expenses around like 5% a month to cover the month that I would go to convention, because that month is a lot more. You've got your hotel, you've got your flight, you've got a lot of expenses plus whatever the new product is, you're going to spend a lot more for that. Okay, I got some notes. I just want to make sure I'm hitting everything I want to say. Oh, okay. All right, what I'm going to share now, I learned from Katie Gibson, and I'm about to implement. I haven't implemented this yet because I haven't really found the way. I've sort of lost the way. So I'm going to teach you something that Katie Gibson taught me. For you guys who are big Lead the Way people, you're going to be like, you didn't know that? So there's a, oh, Meredith, that's sweet. You loved those incentives. Well, you're like only one of, I didn't get the sense people loved them, just FYI. Anyway, okay, so Lead the Way. There is a form on Lead the Way called the Mile Tracker. So you just go on the Lead the Way website and the Mile Tracker. And it's really awesome because you know how Lead the Way is kind of hard to explain to people? And you're like, you have to have 10 and 5. Like I was just on with one of my level 5s and she didn't know the calculation to get her next 2 points, to get her next milestone. She didn't know the calculation to get there. So people don't understand it. It gets kind of complicated. So anyway, with new people, what I want you to do, this is the idea I got from Katie, which is like genius. She's so smart, you guys. I've learned like a lot from Katie Gibson. Basically, when you enroll somebody, tell them to go on that website and to print 12 of those. So basically, this is going to be your sheet for the next 12 months. You're going to have a different one for every month because you're basically teaching them that every month they're going to be looking at Lead the Way. And because this sheet is very self-explanatory, it's like how many PCs, and you put their name and how many consultants. And so it shows you the breakdown. It even shows you the leadership miles. So since tomorrow, we'll start a new Lead the Way. I would highly suggest everybody try this with their people. So you can go in, give people the form, and then have people print for the months of this Lead the Way. And so they can have one sheet for every month starting in August, and they can really track it because a big part of earning Lead the Way is, of course, training your people. And this is an area that I have just like I've been so bad on Lead the Way. But the reason I'm bringing this up is that if you are doing incentives yourself and you are not leveraging the corporate incentives, it's insanity. because you're spending your own money when people that are working will push hard if they understand. If they understand they can earn a Michelle watch if they get like 5 more PC orders, they're going to run. But if you're not coaching them, and I'm so sorry to my team personally, my personal business partners, because I have not been a good example in this, but they can earn these amazing gifts and you're not paying for them. And so I just think it's so important that we leverage things that aren't coming out of our pocket that are so awesome. And you guys, even like the smallest awards you get with Lead the Way, they're packaged so beautifully. I have loved every award I've ever gotten from Lead the Way. So I just want to encourage you guys to be leveraging these things that corporate is doing for us instead of always forking out the cash yourself. Another thing is just when you're doing like a deal for people, I just want you to do the math. So like, how much is the commission? And you need to know how, if you're a Rodan & Fields consultant, you need to know how to calculate the commission on our products. Okay, so it's the commissionable volume. Okay, so you figure out the commissionable volume times 15%, and then the retail profit, which is just the difference between what they pay and the commissionable volume. Okay, so figure out your profit, and then figure out the cost of whatever this freebie is you're going to offer, and just do the math. In some cases, it is worth it to break even because you're getting a new PC out of it. You might be getting a Lead the Way milestone. Like, listen, there are times that you're going to break these rules because you're running for something big. When I'm running for a trip, I'm not worrying about my 20% rule. Like, I'm all in, okay? But you just have to think, like, what is the payoff? Like, when I'm thinking about a trip, for instance, there's so much more than the cost benefit because you're going to get the marketing of being on this trip. You're going to have the chance to be with corporate. You have so many other benefits that are almost like there's no math to calculate exactly the value. This is how I feel about convention. Like convention, I know a lot of you guys are not wanting to go to convention because your teams aren't going. And I just think that's a huge mistake. If I can just give a plug for convention, I think the energy of being at convention, and for you guys who weren't in Vegas, like I know most of you were in Vegas, like that was I can't even describe what the energy was like. And I didn't watch it on virtual, so I don't know how that would vary, but it was absolutely incredible. In the screen, in the room, anyway, that's a sidebar. But my point is that sometimes you're gonna run and invest beyond these limits because it's something that has more value than like, I'm going to earn X number of value in org volume growth, and this is my cost. So like sometimes things are very cut and dry. Sometimes things take more of a, like you have to think through like what value could I get before, what value will I get afterwards, what value will I get there, and some of those are kind of nebulous questions, but the questions I think are really worth asking just to make sure that you are running your business in a smart way. Okay, hang on. Okay. This is just a little bit of a logistical thing. I don't know that I have this figured out, but I've had people ask me how I organize my money, and so I thought I'd go into this, and then if you guys have any questions, I'd be happy to. Oh, thanks for putting that in there, Allie. I appreciate that. The mile tracker, so it's in the comments from Allie Pincus. Okay, so basically, I have always had all of my Rodan & Fields money in a separate account. Personally, I do not recommend using the debit card. I think debit cards are very risky. I've heard of people having their money stolen from it. So if you're getting your money to that debit card, I personally do not recommend that. I would recommend it going into your bank account. It automatically goes into your bank account when you set it up that way. So anyway, mine all goes to one account. And out of that account, I have specific expenses. I set that up a long time ago because, you know, we can't say my paycheck is X. But you can say like, hey, my paycheck covers this and this and this. And so by putting it all into one account, it actually made it easier for me because I just set up those debits to come from that account. And then I use one credit card, one business card that is for all of my Rodan & Fields expenses. And so that way it's easy for me to see what I'm spending on all my different Rodan & Fields stuff. Because I think it's super important to be able to see your profit and loss. I now use QuickBooks. So QuickBooks has been great. I don't know that QuickBooks is necessary until you have a corporation or an LLC. But I do think QuickBooks has been really helpful because it literally does do a profit and loss statement for you. And my CPA's bookkeeper taught me how to use it, and it was really very easy. Like she maybe spent 20 minutes and I had it pretty much figured out, and I'm like not any kind of computer person really. So anyway, so I think having all of it in one account is really helpful. I just think it keeps it so you really can kind of see what your income is, and of course you could have your mortgage or whatever come out of that account. That's been really helpful to our family. I do think if you're not using a really wise CPA, I would recommend that you get a really good CPA. So depending on where you are, you could ask like somebody in this group, hey, do you guys have a great CPA who's really maximizing the taxes and your tax deductions? Because I don't know if any of you have read the book, The Millionaire Next Door. This book was completely life-changing to me. Life-changing. I read it in my 20s, The Millionaire Next Door. And I don't want to get into the premise of the book, but essentially, millionaires are millionaires because they control their expenses. For the most part, most millionaires in the United States do not actually earn that much money. Most of them were like blue collar plumbers and such, owned businesses. They were business owners, but mostly blue collar. And it was because they controlled their expenses. So, but the two things that millionaires generally spend their money on are legal and financial advice. So something I would tell you to spend I don't mean like a fortune, but I mean, you need to be paying for good advice because you're a business owner. So I would recommend getting a very good CPA who can really help you with all of this. And what I'm about to tell you, I'm not a CPA. Again, I'm just going to reiterate that disclaimer. But here are a few things I want to make sure that you are talking to your CPA about whether you can deduct or not, because part of your expenses, part of having a business is that you can deduct things that you're already spending money on. So of course your CRP, that should be no questions, although I think some CPAs are funny about product, so not sure about that. Pulse for sure. Also, your cell phone is now a business expense. So even though you had a cell phone before your business, you can now write off your cell phone. Anytime you go to any meal and you discuss Rodan and Fields, so you're having lunch with your BFF, you were going to have lunch with her anyway, but now you're discussing Rodan and Fields, you can write that off on your taxes. So you need to keep a copy of the receipt, you need the itemized receipt, and you need to make a note on it. I had dinner with Mary and we talked about Rodan and Fields, okay? Travel is the same thing. If you're traveling for Rodan and Fields, I recommend keeping a mileage tracker in your car. You can go to Staples and you get a little notebook, and then when you travel, you just write the number amount. Like every time I leave my house, regardless of what I'm doing, I just start the odometer over, and then if it ends up I did business mileage, I write down how many miles and what I did. Then at the end of the year, that business mileage is a tax deduction. Your incentives, your gifts, your postage, those are all tax deductions. If you have to buy a new computer, that's a tax deduction. Depending on what your CPA says, you might want to take your office space and make that a tax deduction. Trying to think of anything else. Oh, if you're paying for Hootsuite or MailChimp or Zoom, those are all tax deductions. And so I just want to make sure you're maximizing that. And this is where I think really good accounting advice can be really, really valuable, because that's another way. Like some of these are expensive things you were already paying for. And so suddenly these things are like coming off your tax bill, which is reducing what you're paying in taxes, which means you're increasing what you're earning to your bank account. So anyway, I hope some of that was helpful to you guys. I'm gonna just scroll really quick to see if you guys have any questions, and I'll hop off this real talk. Okay, good. So thank you. Okay, any questions? Form. I like Pincus did the form. Okay, cool. All right, I hope this was valuable to you guys. I know the future ones will be mostly about top line stuff, but it was really good being with you. I love you guys. Have a great day. Bye.